All right. Well, good morning, everyone. Thank you for joining us for another edition of our weekly real estate backstory, where we try and go over the comings and goings in the real estate market, what we see happening, and just kind of keep you abreast of all things real estate related here in the Atlanta area. My name is Alan Richardson. I'm the managing broker over at Maximum One Realtor Partners.
My name is Richardson. I'm the compliance broker for Maximum One Realty and Realtor Partners.
So we kind of want to start off by talking about something that kind of came up this past weekend. And it is, we know that we're in a shifting market, but I tell you, one thing we've seen is that the builders are suddenly in a very giving mood.
Must be Thanksgiving.
Or maybe we're in a shifting market. So just wanted to kind of jump in with like we still love new construction.
Absolutely.
It's one of the few places where we still have some inventory coming on the market. New inventory is really down. So, but some things we're seeing out there in that you need to be prepared to go in and negotiate for. First thing is rate lockdowns or rate buy downs. I'm sorry.
Absolutely.
We're seeing where a lot of the builders are offering lots of rate buy downs, both short term and long term. Personally, we're more fans of the short term buy downs because we do feel that mortgage rates over the next couple of years will be stabilizing and going back down. So if we can help them out for the next year or two, that should really make a big difference for them, because we feel like like the old, going back to the old days of you would start off with an FHA loan, then you'd refinance in a few years at a more, whether it's conventional, but a more palatable rate kind of thing. We're also seeing where a lot of refrigerators are included right now. Closing costs, just kind of with all the different variations of what we're seeing on closing costs.
TVs.
Flat screen TVs coming in, and then all sorts of upgrades or what different builders will call premiums and things like that. So we just saw one come in where they threw in a covered back porch.
That's huge,
yeah. Upgrades to the lighting packages, which is also a really big deal because lighting is outrageous. When the builders do it, I'm not trying to be picky, but the builder lighting upgrades are normally outrageously expensive. A lot of free blinds we saw coming in, and then there was a
one up for $3,000 gift cards.
So we're seeing a lot of these kind of things kind of go on in the builders world right now, and so we just want to make sure that you are positioned to be able to take advantage of those opportunities and to better represent your clients. The builders are we still feel that there's not still. We've always felt that there's a very big need for buyer representation in new construction, and it's even more so right now. The builders are getting very competitive, which we appreciate that. Because there was a while that the builders didn't think that they needed us, and suddenly we were really popular again. And so they're not playing with our commissions, they're not doing all these other kind of things now. So.
Right. So just make sure when you go to new construction, you're asking for the maximum amount potential of dollar contribution from the builder.
Now, I wanted to kind of share here one thing that we're kind of seeing is that, like we're not political. We're not trying to get political. We're apolitical kind of thing. But that being said, there has been all sorts of ballot initiatives, and voters across the country have approved all sorts of money to quote unquote fix affordable housing, help affordable housing, those kind of things. And while on one hand, I completely understand, and I'm a affordable housing advocate. I am all for it. We have to understand that we're not always talking about the same thing, and I want you to be an affordable housing advocate as well. But that being said, what the government sometimes feels is affordable housing, and what we feel is
their definition ours is a little slightly different.
Well, and almost not exclusively, but I would say 90% of the time when they talk about when they mean the government or government entities and things like that talk about affordable housing, they're talking about renting. And while yes, I want we want rents to stay normal and to be affordable. For us in the real estate world, home ownership is such a vital piece of our economy. It's how communities are made, is through home ownership. And so with the government advocating for lower interest rates for investors to build more apartments, to renovate more apartments, to be able to put in freezes on how much more, I mean,
A landlord can
bridge,
charge.
yeah, those
Right.
kind of things.
A
While,
moratorium.
you know, I understand that there's probably a need for that. My problem is that the vast majority of legislation is pointed towards
Investment group.
investors and not pointed towards like here in the United States, wealth is created through home ownership.
Absolutely.
And either we're going to be supporting our communities and our and our, you know, our clients in going through the
process.
you know, the challenge and the process of that, or we're not. And for us in the housing, we really have to make sure that yes, I am all for affordable housing, but housing, I'm a for affordable housing for buyers. I'm for trying to keep the costs down to be able to, you know, and that kind of
Well,
thing.
honestly, if you look at it, we're trying to build wealth in individuals who creates a community. So when we constantly put wealth in the investor pocket to a certain extent, we're really not creating wealth for the economy and home.
Well, not for the average American, and that's a really big deal, because that kind of couples with the next data point we want to share, and that is housing sentiment fell to its all-time
low.
Yeah, lowest it's ever been, kind of thing. And so, you know, folks don't feel real good about housing, or real good about buying in particular, but actually even selling. You know,
Sellers too. Sellers feeling the.
you want to see it? I mean, here's the deal: good time to sell dropped 8 percentage points. It's a huge drop, and good time to buy dropped another 3 points. So yeah, buying is you know, the overall consumer sentiment is lower for buyers than it is for sellers. It's still a really challenging market. So we have that going on, and we all know that is being fueled by mortgage rates. It really is. And so this past week, you know, they just released, you know, on Thursday, they released the mortgage survey, which, you know, went up again to 7.08. And then guess what happened? Well, then CPI, the consumer price inflation report came out, and the consumer price index came out, and inflation dropped. Praise Jesus, right? So we saw inflation drop, and so we saw both all and core inflation drop, and by a sizable amount, kind of thing. And so we're really happy to see that. Now, is it where it needs to be? No. You know, do we think that the Fed is going to stop with their current policy? Well, we kind of hope that they're going to slow a little bit. But now here's what happened: is the markets reacted, and boy, did they react positively to the news that inflation is coming down.
That went up like crazy. Dow Jones as well.
Well, and then, but you know, when all those people took money out of treasuries, look what happened to the interest rate. Prior, so on the 9th, it was 7.22% mortgage rate. On the 10th, it was 6.62. It dropped over 0.5 point in just one day. And so we're seeing where mortgage rates and well, we kind of just want to touch on this for a second. I don't think that mortgage rates are in the process of starting a steady decline right now. I think we're still going to be going through a lot of really volatility at the moment, kind of thing. I think the Fed's probably going to come out with their next interest rate hike's probably going to be around 0.5 point. Might be a quarter, but might be a half, that kind of thing. They may try and taper that off a little bit. But right now, the markets are really, you know, looking for good news. You know, the federal funds rate does not directly affect mortgage rates, but it does indirectly, but largely because it affects the markets. And when people move money, you know, out of the markets into treasuries, that raises our mortgage rates. And so when the market had this huge rally, a lot of people moved money out of treasuries into the markets, and as such, rates went down. So we really love seeing that. And so I guess overall, I feel that rates will be starting to taper down. We're going to start seeing moderating of rates moving forward. Just don't expect that we're not going to see 5% next week, that kind of thing. But 3%, yeah, for a long time. I mean, we're going to be bouncing around here for a little while. But just the fact that it feels like we've kind of hit that ceiling is a pretty good feeling for us. So the National Association of Realtors just released their 2022 profile of buyers and sellers, and there's some really, really interesting things. There's some key points to this thing. So it's about 5 billion pages long, and I'm just going to kind of highlight some of the things that we really found that one, some big changes in buying patterns and things like that. And so the very first thing we want to show is that our buyers got older. And I don't mean just for first-time buyers. So yes, our first-time buyers, the median age had been 31, 32, 33. It had been running 33 for the past 3 years. Boom, last year it shot up to 36. Now, at the same time, our repeat buyers also shot up by 3 years, 59. So, this is one of those where you don't ever want to look at the medium, like the average, because the average doesn't matter, right? You're either first-time buyers or repeat buyers. So our first-time buyers median age now is 36. I still feel we're in that 33 to 36 age range kind of thing. And 59, 56 to 59 in their upper to mid to upper 50s kind of thing is where the vast majority of our repeat buyers are. And that's good information to have for both buyers and sellers. For agents that work primarily with buyers, those are going to be your two primary demographics for your buyers. And for sellers, when you're marketing homes, you're probably going to be marketing towards people who are 35, 36, or folks who are 57, 58, 59 kind of thing. One other thing that came out, which is this is a new one this year, is that the number of children under 18 residing in household of buyers, only about 70% of our buyers have
children.
Yeah, no children. 70% of our buyers don't have kids in the household with them.
So that tells you that probably 59, most of them are 59 older. So no.
This is all of our buyers. This is all buyers across the board. So what we're seeing is either folks are holding off having kids. We've seen where especially our millennial buyers are waiting till later. They've been waiting until later to have kids, to buy a home, things like that. And so I've always felt like hey, you have kids and you buy houses, but what we're seeing is this is a pretty recent trend of we're going to buy a kid, we're going to buy a house when we have we're not going to buy kids. So the other thing, and like I said, these numbers kind of work together here. So this next one is that our first time buyer percentage hit an all-time low. We've never been at 26% of our buyers are first-time buyers. The historical average for first-time buyers is about 40% of our market is normally first-time buyers. Right now, we're at 26, and we know that's largely because of what's happened with interest rates. For a lot of our sellers who are buyers, for repeat buyers, they're carrying that equity forward with them. Right. They may not be super happy about the change of interest rates and that kind of stuff, but they're carrying a lot of equity with them. For our first-time buyers, they don't have any equity. They're just coming into a really challenging market right now, and we're seeing that represented. So if you're representing first-time buyers, that's a much more difficult market right now.
Well, you just got to revise your business planning, how you're going to tackle these. Honestly, you guys, education, consult with your client and see where their needs and where they are financially, and make the right move. Because sometimes when you try to jump the gun or not prepare them for all the expenses up front, it becomes an issue.
And then I found this very interesting. Of those buyers who bought, when you look at what's the most important factor when people buy, for our first-time buyers, it's this very intangible reason of they just want to own a home. For our first-time buyers, 62% of our first-time buyers buy because now's the time. I want to. It's part of the American dream. It's kind of like ingrained in us kind of thing. For our repeat buyers, it's being closer to friends and family. Retirement are two of the biggest reasons, but it's much more broad. For our first-time buyers, it's like, I want to buy because I want to buy because it said so kind of thing.
Well, once again, if you educate your client about wealth building and what, home ownership would do for them long term, I think that will compound even more why they want to buy.
And next, what we're seeing is that, guess what? We're willing to move where we can afford to live. So the distance between home buyers that recently purchased versus their previous residence went up drastic. Here in Georgia, last year, the average distance from the home sold to the home purchased was 16 miles. Nationwide, it was 15. This year, 50 miles.
50 miles.
I mean, like we're not talking like a little jump. We're talking about a drastic jump in. I mean, you can see for the last 4 years, we've moved about 15 miles from where we sell to where we buy. This past year, 50 miles. And that kind of breaks down. It's kind of interesting where it breaks down, because the biggest loser here is actually in urban areas and city centers. The other place that's dropped is the suburbs. Suburbs are down, and between suburbs and city centers, those areas, as far as location, have really tapered down. Now, in contrast, what's really blown up, small towns and rural. We will go where we can afford it, is basically what we're seeing. And so like a lot of markets that in the past we've been like, oh, it's a sleepy little town, it's kind of outside there, it's a haul, it's out in God's country, that kind of stuff. Well, guess what? That stuff is blowing up. I mean, nearly a 10% jump up just in small towns. Another 6% jump in rural. And so those are pretty significant moves for a lot of our folks moving forward on that kind of stuff. I just found that to be very, very interesting but it makes sense when you think about what's happening with the market, what's happening with property values have not gone down, and they're not looking like they're going down. What's happened with the mortgage rates, people are going where they can afford to live. And so at the same time, they said, how important is commuting costs? And gosh, 44% was like, nah, don't care. I'll go wherever I need to. Another 32% say, well, I care, but it's not like a driving factor. Only 24%, only 1 out of 4 said it was very, very important. And again, the data kind of does back that up. Now, we just talked about what percentage of our buyers have no children in the home. Well, here's another apparently home ownership and home buying and home selling and kids just don't seem to mix, because also the number of sellers with children living under 18 living in the home, 0. 77% of our sellers have no kids. And so honestly, that number has been high for the last several years. We've kind of been tracking that number. It wasn't this high. It's been in the low 70s. It went up to 77% this year on set. So, 3 out of 4 sellers will not have kids in the home. And for agents, that's a real good thing to kind of key in on, to realize that, like if they've got, what happens after graduation? Well, they're going to start looking, right? Empty nesters, that kind of thing. Now, the size of home purchase compared to the home recently sold. Guess what we're finding out? Only up to 34 years are the homes getting bigger. After that, everything starts going down this year. And honestly, this is new. We saw where home, like we kept wanting to move up. But if you look at what's happened with property values, as well as with interest rates, we can't afford a bigger house.
No.
We can afford a little bit smaller house. And so we're seeing where square footage really, really matters. And what I mean by that is, that price per square foot price, okay, I may have wanted a 5-bedroom, but I'll take a 4-bedroom now because I can manage those payments. People are buying based on payment, not just on price. And that's being reflected in the size of the home that they're buying.
And that they look at it, sometimes their children may not be in there for more than a couple of years. So for them, they can, be flexible for the next couple of years.
Yeah. Tiny houses are good. So, not tiny houses, but smaller homes, that kind of stuff. And then the how long are we living in our homes? That had dropped this past year down to an average of 8 years. We'd seen people moving during the pandemic, that kind of stuff. People were eager to move. Boom, right back up to 10 years this past year. So with the rise in interest rates, we've seen that there's been a lot of folks who said, you know what, I'll just fix up my place here. I'm just going to stay put. And so we're seeing where the 10-year in homes is really kind of going up. And so we just wanted to share that with you because we found that to be very, very interesting information, just as far as being able to help us identify who our buyers and sellers are and how to interact with them in a more professional manner. At the same time, we also have, the new numbers that just came out. And so our total listings are up, right? But I wanted to put this into context. So this is our total number of listings that we've had. So you can see that, yes, we are up over 2021. We have more listings, but when you compare us to 2020 or 2019 or 2018,
We're still
or
down.
I mean, we're down significantly. I mean, like in residential real estate is heavily driven by through the loss of supply versus demand. So yes, we have more supply than we've had, but not that much more, right? And actually, we have a lot less supply than we've had in the previous 5 years, basically 4 or 5 years. And at the same time, yeah, we've seen demand that's waned, but supply has waned as well. And so you can see that where our inventory of newly listed homes, like new listings coming in the market are down significantly. You know, like here in Georgia, we were down almost 20% last month. Nationwide, I think it's down about 16%. But here in Georgia, we were 22% down on the number of new listings coming onto the market. And so we're seeing less people are wanting to list their homes right now. And that's a challenge for us because we need more homes to list on there. Days on market are up, right? We all know that, you know, but where does that sit in contrast to the past years? You can see, yes, days on market are up, but they're not.
We're still lower than the last 5 years. It is up from last year.
Pending listings. Now, this is one that bothers us, you know, because I see pending listings as an indication of what's going on for future sales, that kind of stuff. So you can see, yes, we are down both 2020 and 2021. But guess what 2020 and 2021 were?
It's not a
Gangbuster
benchmark.
years. They I mean, like 2021 was not our benchmark, right? That was an anomaly. And you can see that our pending listings are still higher than 2019, 2018, 2017, which guess what? 2017, 18, and 19, those are solid years. I mean, it was a seller's market. Those were solid years in real estate. At the same time, how about pricing? So overall, median list price is up around 13% nationwide. You know, here in Georgia, we finished out the month being up about 6%, 6 to 8%, depending on the regional area. But I think right at 8% is where we ended up for the month, year over year. And so you can see that for the past 6 years, that property values have continued to increase. And we're looking at those prices stabilizing, but we're not looking at prices.
Look at it, our inflation rate as far as housing goes is much lower than that national average. So therefore, this is why you got a lot of people moving down Georgia, because we're very affordable.
Now, as far as overall price reductions, we are taking it on the chin. And so a lot of that comes with our sellers don't like the market that we're in right now. The sellers are very much, we've heard lots of sellers lamenting both to our agents and to us about, I wish I'd sold a year ago. I wish I had done this. Well, this is how it has to be. And this is how we're going to do it. We're not, and you know what, the market is kind of taking them going, guess what? That's not the market we're in. And I don't want to be harsh or cruel with our sellers, and I don't mean that at all. But like the market is what it is. So the days of like, and we've heard sellers like I want a cash offer. Like
doesn't work.
And like you only need one offer to be able to close a deal. Like that can go all the way to close it. And
cash or
but we're hearing sellers who are like, I only have 5 offers. I'm thinking we should wait. Wrong.
No.
Okay. And so we're seeing where at the same time, the number of price reductions is some of the highest level it's been over the last 5 or 6 years. This is an indication where our sellers are out of touch with reality. And we are not, in my opinion, we're not doing a really good job of being very explicit with them what's happening with valuations. We're not seeing property values increase at the same rate year over year that we're seeing. We're looking at being much more moderate. We're looking at starting to level out 3 to 4% over prior year, as opposed to double digits, which is honestly healthy. But it's very easy when you're not the one selling your house to be very judgmental of those selling, because when it's your house, you're like, I think we can get it, and everybody wants as much as possible for their own house, and so I totally get that. But that being said, it's our job to make sure that we're articulating what's really happening in the market and trying to position them for that. Now, most price cuts are also made on Thursday. So at 18% of all price reductions are done on
They want to
Thursdays.
catch the market going through the weekend.
Yep, but we also recommend that the vast majority of listings, or that if you want to get the highest sale price, you're going to list on Wednesday night or Thursday morning. That's the best time. That's the best day of the week. On other real estate news here, we kind of wanted to share that Redfin has shut down its iBuyer operations, kind of thing. So Redfin's laying off about 13% of their employees, and they are completely shutting down their iBuying. Now, we in the Atlanta market, this didn't really affect us because Redfin never really moved into this marketplace the way that some of the other nationwide iBuyers did. But we're seeing where iBuyers are feeling a lot of pressure. And so at the same time as 1 year ago, Zillow shut down its Zillow offers, and largely because Zillow lost almost $500 million in the third quarter. Well, Opendoor's numbers just came out, and Opendoor lost almost an entire $1 billion in the last fiscal quarter. And so they lost $928 million. They averaged a loss of $42,000 per home. Okay, that is very, very significant.
When Alan mentioned that means not necessarily the sale price versus the purchase price. It just means when they add on their admins or expenses, on the average, it costs them $42,000 to sell and flip a home.
Yeah, and a lot of this came from the general premise is we're going to change how home buying's done. We're going to step in
investment in technologies and different things like that,
and advertising. You can turn on the internet, the TV, the radio, everything. Right.
What they don't take in consideration is a human touch. So this is where you guys are going to excel at, is that relationship part.
So now, can I say that the Opendoor is going the way that Zillow did? No, Zillow had a core business to fall back on. Opendoor is just about iBuying. That being said, we still are interacting with Opendoor, and I'm not trying to bash Opendoor, but they are making a lot of different changes. Right now, they're buying a lot less homes. And if they are, those offers are the ones we've seen lower. We'll just go. We'll go with that.
Just be careful, because they don't always necessarily will purchase a property once they submit an offer.
And basically, one thing that just so you're aware, what Opendoor is trying to do is trying to make an open marketplace where any seller can go and list their home basically for sale by owner on their marketplace, and then they take a smaller piece out of that kind of stuff.
Their admin fee.
And so they are seeing a lot of those issues, kind of thing. And so I don't ever hope for the demise of any other business person.
Correct.
I mean, that's a tough thing, and I'm not that kind of person. But that being said, the idea that I'm also all about defending our industry and what we do and how hard we work. So this idea of, we're going to upend the real estate industry and we're totally fine with cutting out agents. Well, it doesn't bother me that much. This hadn't worked out for them. So not to be snarky, just trying to tell you how it is. I'm a little snarky.
Stop.
Anyway, CE this week. So we have a lot of continuing education again this week. So tomorrow is going to be estates, divorces, investors, and companies, all about contracts, who can sign, that kind of stuff. That's going to be in our Conyers office with Bill Miller. On Wednesday, remodels, rehabs, and new construction, how not to get ripped off. And so that's going to be here in the McDonough office. That's I just had some recent questions this past week on where can I learn a lot more about housing and different styles of house and new construction, that kind of stuff. That class is really good for that. Thursday, we got Remind, growing your business through farming. Right now is the right time to be reaching out and engaging.
Absolutely.
And so that's going to be up at our airport office.
And really quick, someone called me this morning and said the registration are closed. Just give us a few minutes to work on it. It should be back up by 12.
All right. And then also on Thursday, we have Take Me to Closing, Show Me the Money. And that's going to be over in person in our Carrollton office. So we hope that you guys have a great week. If we can be of any kind of service to you, please call, text, smoke signals. We hope that you have a wonderful one.
Thank you, and have a fabulous, happy Monday.